Good morning. We are starting our class from where we had left the previous day, and this is the profit and loss account. We have the gross profit, that is the balance forwarded from the trading and profit and loss account. Now, to this we add other income, discount received. Discount received is that when we are purchasing, say, raw materials or any other things from any other persons, the creditors of the company, and they provide us either cash discount or discount at the time of buying, that is a discount receipt. Now, commission is generally not in the general objective of the business if it's not a service providing company. Commission is if the company has particularly done a specific work for any other company, and that particular company has provided some amount as commission to that company, which may be recurring in nature, which is not generally the normal business procedure of of the company. Now, non-trading income. What does non-trading income include? Non-trading income, it includes, say, any income in the nature of, say, of advances or any kind of amounts received from the employees or any other persons. Now, non-trading income and interest means the company has provided some advances to the employees, and they are providing interest to the company against the loans that they have taken from the company or any other such activities. Now, it may be bad debts recovered. Now, when bad debts are incurred, we have um, uh, to deduct the bad debts from our income statement of that particular year. But when those bad debts are recovered, we again have to take steps and give that amount, uh, again add that amount back to our income statement. Now, rent received is, so you have let out some portion of your go down or any other place on rent, and you are receiving rent from that place, either from employees or from any other outside person. Profit on sale of assets. And profit on sale of assets means, say, machines. Generally, these are things that are obtained on sale of machinery. Now, when you are selling a machinery, say a machinery is a depreciated machinery. A depreciated machinery, say, is say you have a hydraulic press. A hydraulic press, you have purchased that hydraulic press 5 years back, and depreciated value of that hydraulic press is, say, around 2,000 rupees, and you had purchased that hydraulic press at 10,000 rupees. But when you are selling that hydraulic press and purchasing a new hydraulic press, you are selling it at 3,500 rupees. So, profit on sale of assets means you are receiving 1,500 rupees as capital profit. So, this we cannot add in the gross profit portion, but we have to add with the gross profit in the net profit portion of the profit and loss account. Now we have other, these are expenses that are to be added. What are the expenses that are to be deducted? Now, office salaries. Office salaries are, say, salaries of the finance manager, marketing manager, other managerial or non-managerial staff, or not directly related to the factory or the manufacturing unit. All that we have postage and telephone, street post, courier charges and telephone charges, traveling and convenience charges. It includes charges on uh, uh, the traveling and conveyance for company work, for marketing personnel, and all that legal and the legal charges, any kind of legal charges incurred by the company for any lawsuit made by the company, or any lawsuit fought by the company, that is for or against by the company. Office rent, if the office place is not, does not belong to the company, and the office has to pay a rent, an office rent for that particular company. And depreciation. Now, depreciation, as we know, is the amount that is chargeable to the profit and loss account, and this is deductible from your profit and loss account as per income tax laws. Audit fees the company falls under statutory audit requirements, and then audit fees are to be paid. Insurance charges, repairs and renewals means any kinds of repairs, any kinds of uh, uh, maintenance activities done by the company. Now, selling and distribution expenses, other deductible expenses, say advertisement charges. If the company incurs any form of advertisement charges, carriage outward means anything that is paid other than say anything other than for capital items, anything that is paid for sending the goods to the customer and all that. Free samples in for mostly in case of medicine companies, mostly in case of medicine companies and all that. Say how we provide free samples to the doctors and all that, and for test marketing and all. For bad debts, for bad debts, debts that are declared to be bad, they have to be deducted, and any kind of sales commission of the amounts paid to the individual salesperson over and above their salary when they either achieve their target or they overachieve their target. Say they're asked to sell 100 units of a particular unit of a particular machine, say a particular laptop within a month, but they actually either sell 100 or more than 100, then they're entitled to a certain commission. So this is the basic structure of the profit and loss account, and this is the trading account. Trading up to the means the gross profit portion. We have opening stock. On the on the left hand side is the debit side, and on the right hand side is the credit side. So on the debit side we have opening stock, and purchases, less purchase returns. All raw materials purchase is not used up, so we have purchase returns. Carriage inwards means any expenses that is incurred by the company for bringing in the for bringing in the raw materials from the for paying in for the raw materials we bought from the place of from the creditors from the seller's place to the company, and wages, factory workers wages, factory managers wages, store managers wages, and all that. Everything that is related to the factory, customs, excise duty that we pay for, say, releasing of those particular goods of the company. On the credit side, we have the sales, less sales return, and closing stock. It might also include, say, but if that is specifically relates to the goods we immediately transported to certain places, like say food items and all that. This will come under gross profit, else it will come under the net profit per portion, and then we have the closing stock, and say this the balance. If the credit side is more, then we have the balance as gross profit transfer to profit and loss account. However, if the debit side is more, then we have gross loss, and that will be also transferred to the profit and loss account. Now here we have almost schematic representation of almost all the costs that we need to know. So we have gross loss if that is a loss, we have gross profit if it is a profit transfer from the trading account, and we have the profit and loss account. Now we add to the gross profit commission received, rent received, we have interest received by the company. Interest means interest from fixed deposits, interest from investments made by the company, discount received, discount from creditors, discount on purchases, dividend received by the company on the investments, interest on drawings. Since you basically know that the concept of the business today is that a person and his business are both separate entities, then that particular um, person who has made taken say drawn a certain amount from the company, then that amount he has to pay interest on that drawings made from the his own company. And reserve or discount for risk, discount on creditors. If we have decided to provide discount to creditors and we have created a reserve, then you can deduct that amount in that reserve from here. And then we have bad reserve for discount and add this over here. Mm, the unutilized portion of the reserve, interest on renewal of bills, interest received, so the bills that are receivable, and you are taking interest and renewing the bills, that will be added up over here. Bad debts recovered, as previously said. Provision for bad debts that has not been utilized will be added back. Royalties received, as per the intellectual property rights, say up to 14 years, any royalty will be any for 14 years you have to pay royalty to the particular company for using any patents or thing, patented items or things like that. Apprentice premium paid to apprentices, any premium is over and above the amount, miscellaneous income and sundry income. This is all for the day. We will continue the next day.